If you're self-employed in Wisconsin and someone told you getting a mortgage is going to be a problem, stay with me because the issue isn't your income, it's how your income is being presented, and that's completely fixable.
It's the Mortgage 101 podcast where real talk meets home and life.
Getting a mortgage when you're self-employed in 2026 is absolutely possible. I do it for clients regularly, but there's a right way to approach it and a way that's going to get you denied. And most people don't even know the difference until it's too late. For those of you who don't know, I'm Manly Haynes, an independent mortgage broker based out of Pewaukee, Wisconsin, and I regularly help contractors, business owners, 1099 workers get approved after the bank had already told them no. Here's the thing, there's something you might be doing right now, something your accountant told you to do that is quietly working against you when it comes to qualifying. In a few minutes, I'm going to tell you exactly what that is and how to fix it. I'm also going to show you a loan option that most buyers never even hear about because most lenders can't offer it. Let's get into it. Here's what most self-employed buyers run into. Your business grossed $180,000 last year, but after your deductions, home office, vehicles, equipment, your taxable income on paper shows $62,000, and the bank qualifies you on $62,000. That feels wrong because it is. Conventional lenders have to use your net income from your Schedule C or your K1 average over the last 2 years, not your gross, not what hits your account. That's what's left after everything's written off. So you're sitting across from a loan officer looking at numbers that don't represent how you actually live, wondering, why don't I qualify for the home you've built a business to afford? But here's what most loan officers overlook. Some of those deductions can be added back, and that changes everything. Let's just say it out loud. Your accountant is doing their job, writing every legitimate expense. It's smart, but every dollar you write off also lowers your qualifying income. And most self-employed buyers don't think about it until they're in front of the lender. So here's the part that matters the most. Depreciation, depletion, certain one-time expenses, these can legally be added back to your qualifying income. A lot of loan officers don't even bother or don't know how. So let's talk real math. Schedule C shows $62,000, but you've got an $18,000 depreciation and $7,000 in add-backs, so your qualifying income just rose to $87,000. Same returns, different eyes on them. That's the difference between being denied and approved on a $350,000 loan. That's the conventional path. But what if your returns still don't tell the full story? There's another option, and this is the one most buyers never even hear about. This is the part that most bank loan officers will never tell you because they can't even offer it. As an independent broker, I have access to bank statement loans. Instead of tax returns, the lender uses 12 or 24 months of business bank statements and calculates your average monthly deposits. That's your actual cash flow. Say your statements show about $14,500 a month. Depending on your expense ratio, that lender might be able to use up to $10,000 to $11,000 as your qualifying income. That annualizes to $120,000 to $130,000. Compare that to the $62,000 on your return. Completely two different qualifications. The rate is typically a little higher than conventional loans. Down payment requires maybe slightly larger, but for the right borrower, this is the path to the door. A bank has one product shelf. I have access to over 40 lenders, including non-QM lenders, specializing in exactly this. My job is to match your income picture to the lender whose guidelines it fits best with. Here's the truth most self-employed buyers in Wisconsin never hear. The problem is almost never that you don't earn enough. The problem is that nobody told you your financial story the right way. I've had clients that come to me after 2 banks said no, same income, same returns. We restructured the documentation, found the right lender, and closed. Nothing about their finances changed. Everything about how we told the story changed. If you're self-employed and planning to buy in Wisconsin in the next 6 to 12 months, pull the last 2 years of your tax returns and the last 12 months of your bank statements now. Don't wait until you're all ready to buy. The earlier we look at the full picture, the more options we have. Planning ahead is how you can get from I might qualify to I'm under contract. And one of the biggest mistakes self-employed buyers make is waiting too long to have this conversation. Anthony and I actually walked through a real case scenario on the Mortgage 101 podcast. It was a Wisconsin business owner who was 90 days away from wanting to close, and he almost didn't make it. There's something from that episode I wish every self-employed buyer would hear before they talk to a lender. And if you're interested in watching it, the link is in the description.